Hello and welcome. You've probably seen the headlines, right? The Indian rupee is falling against the US dollar. But what does that really mean? And more importantly, why is it happening? Well, today we're going to break down the powerful forces at play behind these numbers.
So let's start with the big question right up front. Why is the Indian rupee falling? It can feel like it's in this constant tug of war with the dollar, a battle it just can't seem to win. The answer is pretty complex, but don't worry, we're going to unravel it all together, piece by piece. Here's our game plan for this explainer. First, we'll cover the absolute basics. Then, we'll dive into why the dollar is so incredibly powerful around the world. After that, we'll see how India's trade balance plays a role, look at some of the pressures from inside the country, and finally, we'll explore what the path forward might look like.
Okay, first things first. Before we can understand why the rupee is falling, we've got to be on the same page about what an exchange rate actually is. Think of the exchange rate as just the price tag on another country's money. So if the rate is, say, 90 rupees to $1, it literally means you need to hand over 90 of your rupees just to get one single US dollar. So when you hear the news say the rupee is falling or weakening, all it means is that number is going up. It now takes more rupees to buy that exact same single US dollar. The higher the number, the weaker the rupee is in comparison. Simple as that. All right, now we're getting to the real heart of the issue. You know, at the end of the day, any currency is just like anything else. Its value comes down to basic supply and demand. And when you compare the demand for the dollar to the demand for the rupee on the world stage, well, it's pretty lopsided. Just get a load of this number, 80%. A massive 80% of all trade between countries is done using US dollars. That's huge. Whether you're buying oil, selling software, or shipping cars across the ocean, the dollar is the default currency. It's built on the trust people have in the massive, stable US economy. This creates this incredible, constant demand for it. And this quote just drives that point home in a pretty shocking way. It points out that even terrorists demand their ransoms in dollars. Why? Because it's the one currency that everyone, everywhere, trusts and needs to do business on a global scale. So the takeaway here is really simple. There is a constant, gigantic, worldwide demand for US dollars that just doesn't exist for the Indian rupee at that same level. And that fundamental imbalance, right from the start, gives the dollar a huge advantage. Okay, so we've established this massive global demand for the dollar. Now let's connect that directly to India's economy through something called a trade deficit.
Now, trade deficit might sound like some complicated economic term, but it's really not. All it means is that a country is buying more stuff from the rest of the world, those are its imports, than it's selling to the rest of the world, its exports. So here's how that causes a problem. Let's walk through it. Step 1, India buys more from the world than it sells. Think about all the oil we need, for example. Step 2, how does India pay for most of those imports? You guessed it, in US dollars. Step 3, to get all those dollars, India has to sell rupees on the open market, which increases the supply of rupees out there. And what happens when you flood a market with something? The price goes down. Which brings us to step 4, the rupee's value falls.
Now, this isn't all just about global economics. There are also factors right here inside India's own economy that are putting extra pressure on the rupee. Let's take a quick look. This comparison is pretty eye-opening. The average income in the US is more than 30 times higher than in India. So what does that actually mean? Well, it means when the prices of essentials like fuel and food go up, inflation, it hurts the average Indian citizen much, much more. That economic vulnerability can make the rupee seem like a less attractive and stable currency for big international investors. And the pressures keep piling on. You have inflation, which slowly eats away at the value of the money in your wallet. Then there are interest rates. If investors can get a better return on their money in another country, they'll pull their cash out of India. That's what's known as capital outflow. Investors selling their rupees to buy dollars to invest somewhere else, which of course pushes the rupee's value down even further. Okay, so with all these global and domestic pressures, you might be thinking this situation sounds pretty bleak for the rupee, but that's not necessarily the case. So what can actually be done to fight back and strengthen the currency?
Well, it's really a multi-front battle. You can boost tourism, which brings more foreign currency in. You can encourage other countries to trade directly in rupees, which creates more demand for them. Setting the right interest rates can act like a magnet for foreign investment. And maybe the biggest one of all is having stable, predictable government policies that build confidence. At the end of the day, the goal is to convince the world that the Indian rupee is a smart,
safe and profitable currency to hold onto. And that brings us to our final thought for today. We've seen all the powerful forces that have kept the US dollar at the top of the food chain for so long. But in a global economy that is constantly shifting and changing, you have to wonder, is the dollar's reign as the world's go-to safe currency going to last forever? Now that's something to think about.